Good afternoon, and I hope everybody's having a fantastic Freedom Fest. This is our third year at Freedom Fest, and it's been a tremendous experience each and every year. I'm Scott Hodge. I'm president of the Tax Foundation. And for those of you who don't know much about the Tax Foundation, we're one of the oldest think tanks in the United States, formed nearly 30 years ago in 1937 during the depths of the Depression. And we're the oldest tax-oriented group in the United States. And for the last 80 years, we've really had two basic functions, and that is to produce data and research that helps raise the tax IQ of average Americans, and especially their lawmakers. And secondly, we design various tools to help lawmakers make better tax policy. And what makes this a little bit unusual in our very highly politically charged realm is that the Tax Foundation is very nonpartisan. We stick to our knitting. We believe that sound economics and good data ought to drive the debate, not politics and rhetoric. And for the last 80 years, that's exactly what we've been doing. And you have some of that research there on your chair. We are kind of unusual for a national group, and that about half of our work is actually focused on state and local tax policy, which you'll get an insight into in just a few minutes. And then, of course, the rest of our work is focused on Washington, not just on federal policy, but also international policy as well. So that's a little bit of an insight into the Tax Foundation. And let me tell you a little bit about our very interesting panel that we have this afternoon. We have an outstanding panel, I think, to talk about tax reform and how that's advancing at the state, federal, and international level, and how free market groups and liberty-minded groups are helping advance tax reform at all levels, not just here in the United States, but also internationally as well. And I'm sure some of you might be thinking, you're looking at me now and thinking, I don't feel like tax reform is moving here in the United States. I think it's probably pretty easy to see the glass as half empty. I mean, after all, just the other day we got a headline that Philadelphia just passed another soda tax, not to make people healthier. No, that would be a noble, at least, excuse for raising people's taxes. This was because, as the mayor said, we just need the revenues. And it's also kind of disheartening to think that we just saw another headline the other day. Actually, we helped produce it because I did the research behind it. The amount of time that we Americans now spend conforming to the United States tax code is increased by 50%, from over 6 billion hours to now 8.9 billion hours. To put that in perspective, that's the equivalent of 4.3 million Americans doing nothing but IRS paperwork 24/7, 52 weeks a year. That's greater than the entire population of the Chicagoland area, doing nothing but IRS paperwork, at a cost to the economy now of $409 billion a year. Pretty staggering. But even at the global level, the tax collectors are on the march, and largely against U.S. companies as well. In fact, there was just another headline the other day that tax collectors in Madrid, Spain, went charging into the Madrid offices of Google in a raid to collect information to prove that Google was not paying its, quote, fair share of taxes. This came a month after tax collectors in Paris did the same thing to Google's Paris offices. Italy has done the same thing. Bureaucrats in Europe have created a project that they call the BEPS project, Base Erosion and Profit Shifting Project. The whole emphasis of this particular project is to crack down on what they call harmful tax competition. And for those of us who believe in competition, that ought to be a good thing. No, in Europe, tax competition is supposed to be a bad thing. And much of what their practices are trying to do is crack down on U.S. companies and raid their coffers at the expense of the United States. Now, I suppose it's easy to kind of listen to stories like this and get depressed, but call me Pollyanna, I am extremely hopeful. I'm extremely hopeful that we have a very strong liberty movement that's advancing tax reform, not only here in the United States, but also globally. And I see signs of that everywhere. At the state level, Indiana just lowered their corporate tax rate from a high of over 8% to now 6.5%. And as Joe Henchman will talk about in a few minutes, that's a signal, a sign of the kind of tax reforms that we're seeing all over the United States at the state level. At the federal level this year, we had a record number of presidential candidates propose serious, thoughtful, detailed tax reform plans that my economists were able to score and measure that were going to be powerful in their ability to raise living standards, increase the size of GDP, and increase the number of jobs in America. And we think at the international level, we're also seeing some signs of progress. After all, the corporate tax rate, for instance, is at the lowest level it's been in nearly 100 years as we look at the global average. And we're seeing more and more countries lower their corporate and business taxes in order to lure jobs and investment, mainly from high-tax countries like the United States, France, and so forth. So I think the Liberty Movement has a great story to tell. And this afternoon, I think we have three great panelists who can tell that story extremely well. And I'll work from my right to, or my immediate right to my far right. First, our first speaker, yes, unusually further to the right than me. Our first speaker will be Joe Henchman. He is VP of Legal and State Projects at the Tax Foundation, my colleague. And over the past decade, Joe has built the Tax Foundation state program into the most effective state organization in the country. And that's not my words, that's the words of the trade publication Tax Notes that named us Organization of the Year 3 years in a row. And Joe will talk about tax reform at the state level. And then we'll have, you may have seen that Steve Moore was to be on our panel this afternoon. He's been called back to the East Coast to meet with a leading presidential candidate to talk about his tax plan. I'll let you figure out who that is. And so unfortunately, Steve at the last minute had to call in a replacement. And he's our friend, Peter Ferrara. For those of you who don't know Peter Ferrara, he's a legend in the Liberty Movement and the conservative movement. He's now a senior fellow at the Heartland Institute. But many years ago, you may not know that Peter wrote the first Social Security privatization plan for the Cato Institute back in 1980?
Yes, yeah.
80, 81.
It's actually my third-year paper at Harvard Law School, which means it had to be done by 1979.
So he goes a long way in promoting free market ideas. And then lastly, I think that many of you will also know our final panelist, Brad Lipps. He is CEO of the Atlas Network and has been with Atlas since 1998. And really, there is no organization anywhere that does more to promote liberty across the globe and to support liberty-minded organizations than Atlas. If you don't know much about Atlas, you ought to get to know what Atlas is doing to promote liberty across the globe. And no one has a better perch from which to see how liberty-minded groups are promoting tax reform than Brad. So we'll start with Joe and work our way to the state level to talk about how free market organizations are moving the tax agenda and hopefully how you can get involved as well. Thank you.
I'm going to stand. Thank you, Scott. I'm going to stand up because I can't see half the audience around the little corner here. But great. Thank you all for coming. Let's talk about some good news before Peter talks about the federal government. So as Scott mentioned, at the state level, we've got a very vibrant state program. We have a team of 4 of us at the Tax Foundation that focus specifically on state policy. Last year, we've been to 33 states. This year, what did we add it up to this year? It was 27, I think. So 27 so far this year, working directly with legislators to make tax systems simpler, lower, and more sensible. We put out 219 reports last year. More on the way this year. But, of course, the best report is irrelevant if you don't have the relationships out there to make them happen. And so that's why we spend a lot of our time on the road, including honoring good work with awards. The main publication we put out at the state level is our State Business Tax Climate Index, and this ranks the states on state tax structures. And so it ranks 1 to 50, 1 being the best and 50 being invariably New Jersey. The 50 states, and it looks at all matters of state tax structure, the rates, the bases, who's exempted, who's not exempted, who's favored, who's not favored. And so it's not just a ranking, but it's also a roadmap for how to improve the state. And a lot of our conversations begin with an official asking us, well, we're ranked this on your report, how can we do better? And that starts the conversation, because the only way you can game the State Business Tax Climate Index is to pass good policy. In addition to that, we also have numerous reports we put out every year on all kinds of tax topics. Just for your own edification, the popular topics of the moment among state legislators are marijuana taxes, sales taxes on the internet and digital goods, and property taxes. So that's what they're asking us about. I don't know if those are your priorities, but that's what we're getting asked about. And we also put out chart books and tax reform option books on specific states. And we have a booth out in the exhibit hall if you want information on your state. Well, I only have 10 minutes, and I obviously can talk all day about this, so I wanted to narrow the scope a little bit and talk about some successes at the state level. And I'm not going to talk about all of these, but these are all in the category of successes, but I am going to talk about 4 of them. One of them is a state that I imagine will be in the news in the near future, Indiana, and Scott foregrounded this a little bit. Indiana, under its previous governor Mitch Daniels and under the current governor Mike Pence, they haven't done a big comprehensive tax reform, but they have done significant things each and every year to make their tax system better. In 2013, they started by repealing their estate tax, cutting the already second lowest in the nation income tax and their corporate rate. The next year, they came back, tackled the tax on business personal property, significantly reforming that, cutting a lot of the locals out of that, which was a good change there. 2015, more individual and corporate rate cuts. Future changes, which are already built into the law, will have their individual rate drop down to 3.23%, which is, again, still the second lowest in the country, and depending on what of the states that have it, and depending on what Pennsylvania do, might be the lowest in the country. Continuing to cut their corporate rate, which, as Scott mentioned, used to be 8.5%, now 4.9% by 2021. They're a top 10 state now on our State Business Tax Climate Index. North Carolina did a comprehensive reform in 2013. The driving forces behind that was the first Republican takeover of the state legislature and the governorship since Reconstruction. There was a desire to be more competitive, including a lot of incentive fatigue, giving special credits and deductions to particular companies or particular industries, and not really seeing that turn into statewide growth for all industries. So what did they do? They cut their income tax from 7.75% to 5.8%, with further reductions scheduled, and some of them have already taken effect. Cutting their corporate rate in stages from 6.9, ultimately down to 3%, and it's looking like that's what it will be soon. Broadened the sales tax a little bit, repealed their estate tax. All in all, it's a net tax cut of about $800 million. And what have they seen? They've seen, not only are they bringing in more tax cuts, in addition to that this year, they boosted their standard deduction and accelerated some of those scheduled reductions. They've also seen strong economic growth, strongest in the Southeast and very competitive nationwide, and record budget surpluses. It was the largest ever increase, one-year increase in our State Business Tax Climate Index. They went from 44th to 16th in 1 year. Tennessee, this is a this-year improvement. They don't have an income tax in Tennessee, one of the 7 states one of the 9 states that don't, except they do have a 6%, it's called a Hall tax in Tennessee. It's a tax on interest and dividends. So they don't tax wages, but they do tax interest and dividends. 200,000 households in the state pay it. They've tried, ever since it was put in forever ago in the 60s, they've tried to repeal it, never really got anywhere. This year, they were able to tackle it. The bill approved lowers it immediately to 5%, and then 1% a year up until full repeal in the year 2022. We project this will move to 11th on our State Business Tax Climate Index. Excuse me. And I really have to, they're not here, but The Beacon Center of Tennessee is an excellent group in Tennessee and took the lead on this legislation. We worked closely with them, but it was amazing work on their part building the grassroots effort. District of Columbia, is this a mistake? Maybe the District of Columbia is not supposed to be on here. It is. This is, maybe you already saw it on there, but I looked this up recently just out of curiosity. In 1984, when Reagan was running for re-election against Mondale, he won every state in the country except Mondale's home state of Minnesota, which he won by a couple points, and D.C. Anybody guess what the margin was in D.C. that Mondale won over Reagan in '84?
There was a landslide.
30? 40? It was 83-13, so it was a 70-point margin in D.C. There are no Republicans in the District of Columbia. However, they did have a fiscal meltdown in the 90s, which really sucked then, but it led to a strong institutional desire to have fiscal conservative budgeting policies. So the comptroller, who's a designated official, has to sign off on all new spending that it's paid for and sustainable, which I highly advise for every state to do. And there is a desire to be economically competitive, so they put together a tax package to try to address all of these issues. They're dropping their business tax from a very high, almost 10%, to 8.25%, cutting the middle income tax bracket from 8.5% to 6.5%, increasing standard deduction, recoupling the estate tax, broadening the sales tax. They broke it into different components to take effect as revenue came in and revenue exceeded certain projections, and this year the last of the pieces are taking effect. And we're very excited to have worked with a lot of groups on both the left and the right to put together this package. There's also, of course, more stuff to be done. If your state is listed on this screen, please talk to us after because we need your help. Obviously, we've been involved in all of these and more in helping provide the research, providing the analysis, making sure the right thing is done because politicians, of course, can cast the votes and grassroots people can provide the energy, but if the policy is not written well, it won't succeed, and we've seen that in a couple of other states. States on the left are states where there is some threat, a bad tax policy threat active out there that we're working against. States on the right are states where we see a good window of opportunity to get something constructive done. And hopefully we can get to some of that in the questions because I've got the stop sign now. Thanks.
I want to pick up on where Scott Hodge framed the issue, which is in this national election, we've had on the Republican side the most amazing experience with tax reform. Every Republican candidate, I believe every single one had their own tax reform plan. Everything from Ted Cruz's 10% flat tax, which had a 16% business VAT, to Donald Trump's proposal that was scored at one point as losing $10 trillion in revenue. I actually asked Scott, how is it possible to have a tax reform plan that loses $10 trillion in revenue? I don't know who put that together, but I can tell you that the tax reform is in good hands under President Trump right now because it's Steve Moore and Larry Kudlow are rewriting his tax reform plan. So that original tax reform plan, which you hear ridiculed in public discussions all the time, that one is defunct. And so a very good new plan is coming out that's going to take its place. Let me give you some principles that came out of the Republican primaries this year, tax reform plans. One is that I don't believe there was a single plan that was designed to be revenue neutral, which is something that has been an issue to me all along, that tax reform, in my view, should not be revenue neutral. Any revenue neutral tax reform plan means that we're going to raise taxes on these people over here to give them a tax cut over there. Because any tax reform plan is not going to be revenue neutral person by person. So any revenue neutral tax reform plan is going to cut taxes for some people and raise them for others. That's the most difficult thing to ever try to get through Congress. People who are having their taxes raised are going to be a lot angrier and motivated against it than people who are getting a tax cut. So
someone described it to me once as saying a poker game is revenue neutral.
Yes, well, that's right. So tax reform should be a tax cut. The other thing is that merged is that, of course, the tax reform involves reducing rates. That's the whole point of tax reform. And so that was understood by all the Republican candidates. So all their plans focused on reducing rates. And the whole point of reducing rates is to give people incentives to produce. So that's what economics is all about. If you want economic growth, you got to have production. Somebody has to produce. It's not, economic growth is not about consumption. It was a huge fallacy that arose in the 1930s under Lord John Maynard Keynes. I just wanted to take the position that consumption is insatiable. You don't need to worry about stimulating consumption. People want to consume. If you have a teenage daughter, you know. You don't have to worry about stimulating consumption. So go to the mall on the weekend and you'll see huge throngs committed to the Keynesian concept of consumption. That is not where the focus needs to be. What makes economies grow and become successful is production. So you need incentives for production. And that's the point of reducing rates. Now, it's interesting also that reducing rates, even under liberal Keynesian economics, is pro-growth. And but this doesn't seem to have dawned on the Democrat Party because their idea of tax reform is how high can you go? And so they're talking about going back to the days of whatever, 70% rates, 80% rates. What was it on when Kennedy came into office? I believe it was the top rate was 92%. People can't understand that at 92%, you're shutting down production. Even the actors in Hollywood, Reagan recognized that when you reach a certain point on your marginal tax rates, it doesn't pay you to do another movie. And so, he said he used to shut down every year when he reached the point where, he was getting up to this idea of this 92. In Great Britain, at a certain point, they had a 98% tax rate. That was the inspiration for the Beatles song "Taxman," and so it was even having an effect on them because they began to realize at a certain point it didn't pay them to record another record because it was all going to Her Royal Highness there, and they weren't getting any of it. And so the point is. We're at a point in our politics where I don't mean the Tax Foundation is rigorously nonpartisan, but there is a partisan recognition to be made here, which is that the Democrat Party today stands for the proposition that they missed the whole point of the 20th century. The whole point of the 20th century was government control of the economy does not work. Hello, Bernie Sanders, did you know what were you doing in the 20th century? Were you paying any attention? This is a man who has not had a new idea since the 1930s. He wasn't even born yet in the 1930s. And his mind is still frozen circa 1935. But they're still debating how high can we raise the rates. So this is one of the many issues which is very binary right now. So this is why if you get a Republican president, you are going to get tax reform. The entire party is committed to tax reform, and at least half the congressional Democrats understand that we do need some economic growth in America. And so you have a bipartisan tax reform where 100% of the Republicans and half the Democrats vote for it. And it is going to involve reducing rates somewhere along these lines. Now, now here's what is emerging here. A very fascinating thing that's going on was started by House Speaker Paul Ryan earlier this year, where he appointed 6 task forces on different issues. Members of these task forces were members of Congress, members of the House of Representatives, and he had, including the relevant chairman in each of these areas. And one of the areas is tax reform, and they came out with their tax reform plan. And this, from what I know, Steve Moore's not telling me what's in his tax reform plan, but from what I know talking to him, it actually is somewhat similar to what the Ryan Task Force report recommended in its report. And so what that report proposed is a plan with 3 tax rates. So it's 12%, 25%, and 33%. Those are the 3 rates in the plan, and so the 12% rate is like at $9,000 for single people, $18,000 for couples, $13,000 for heads of households. That's where the 12% rate starts. The 25% rate starts at about $37,500 for singles, $70,000 for married people filing jointly, and I can't quite read this here, $50,000 for heads of households. And the 33% rate is it's basically close to $200,000, where the 33% rate kicks in for singles, and it's roughly $200,000 for people married married couples filing jointly and heads of households. One key to this is that the people in the bottom rate now is 10%. But what they do is they raise the standard deduction. They actually propose to double the standard deduction. And so that people who are in the 10% rate today, their income taxes are zeroed out. So you can't really have a tax reform plan that says, oh, we're going to cut rates for people at the top, and we're actually going to increase taxes for the people at the bottom. So you have the situation in America today. I'm going to give you actually a fascinating statistic in a minute. But today, 40 to 50% of American people pay no federal income taxes. So look at me personally. The federal government says to me personally, Peter Ferrara, you are liable for more taxes to us every year than 100 million other Americans combined. That is a fascinating statistic. That shows you the distribution of the tax burden. So they expect me to pay. I say expect me to pay because actually I'm very behind, and so someday I'll catch up, but I don't really have a plan for actually doing that, but I do have.
You're a very generous person.
But yeah, they are looking to me to pay more federal income taxes than literally, this is a true fact, 100 million other Americans are asked to pay. So what they do though is people who are in the 10% bracket, which are people making less than $10,000 a year, basically, their taxes are zeroed out under this tax reform plan. So it's very careful not to step on political minefields, this plan. And so it actually increased the child tax credit from $1,000 per child to $1,500 per child, and it doubles the standard deduction. And then on the business side is where the really interesting stuff happens. So they propose a corporate tax rate of a federal corporate tax rate of 20%. So the current federal corporate tax rate is 35%. It's actually the highest in the world. You can find some countries in the Sahara Desert who have higher tax rates, but it's not worth talking about. So it's actually American corporate tax rate. The top marginal has the highest top marginal tax rate in the entire world, let alone not just the industrialized world, and so at 35%. So they propose to reduce that to 20%. They actually have an interesting innovation. They have a max. They put a cap on small business taxation of small businesses. It's a 25% cap. The top rate is 25%. Small businesses are people who file not as corporations, but file as sole proprietorships, partnerships, LLCs, subchapter S's. They have a new rate for them, maximum rate of 25%. Also on the business side, they allow for expensing, which is an immediate deduction for capital investment, capital expenses, instead of depreciation. So depreciation is abolished. No more of this idea of these arbitrary things. You have to look up at the table and see, okay, I bought this computer and it's 25-year depreciation, and so every year I get to deduct 1/25 of it. No more of that. That would all be gone under this. No more depreciation. You would have immediate expense, and just like every other business expense to produce income, you immediately deduct it. There's no business expense to produce, no expense to produce income that is not immediately deductible, except capital. So this is another way of discriminating against capital, like we do with the multiple taxation of capital. Another way that they deal with this issue of multiple taxation of capital, because capital income in America, as those of you who are investors know, is taxed multiple times. So you have the individual income tax, you have the corporate income tax, you have the capital gains tax, you have the dividends tax, if you manage to die, they're still going to tax you again. So you have another layer of taxation. So the way they address that in this tax reform plan is they give you a 50% deduction on business on capital investment income. So the rates, instead of being 12, 25, and 33, are 6, 12.5, and 16.5, because it's half the rate, because you get a 50% deduction on capital gains, on dividend income, on interest income. And so they adopt territoriality. So America is the only country where they try to tax businesses on income that they produce abroad. And so wherever you go in the world, if you go hide on an island somewhere in the South Pacific, they try to tax you on your income. This is why there's $2 trillion being held overseas, because the tax is triggered when you bring it back to America and actually use it to create jobs here. Then so people are reinvesting it overseas, whatever they earn overseas, are reinvesting it no other country. Even Great Britain was the last to give this up, and so they are the last country that does not have territoriality. Territoriality means you're taxed where you produce the income. So if you produce it in Germany, you're taxed under the German tax system. If you produce it in America, you're taxed under the American tax system, not taxed under both. So this plan fixes that. They adopt territoriality. You're taxed by the country where you produce the income. They also have border adjustability, which is another highly beneficial tax change, which is that when you export something overseas, you get a tax rebate on your taxes. You get your taxes are refunded to you. And when people bring products into the United States to sell them, they are taxed on the income they gain out of what they sell. So they adopt border adjustability. Now, as you can imagine, this plan is actually very pro-growth, and the Tax Foundation has scored this plan. They have the most sophisticated dynamic scoring model in the entire country, and that's increasingly recognized by the news media. The GDP is I got here the indication here to stop, but this is just the part that Scott Hodge is interested in. So let me just tell you what his plan. So he scores the GDP 9.1% higher over the first 10 years. The wages are 7.7% higher over the first 10 years. 1.7 million new jobs created. 8.4% increase in after-tax income, and then on a dynamic basis, the revenue loss is only $191 billion over 10 years. That really is a trivial amount. When you got a budget that's $4 trillion a year, you can afford a tax cut of $190 billion over 10 years. So this is extremely pro-growth, and I expect Trump's model to new tax reform plan to follow this most closely. This Ryan task force is something for all of you to pay attention to, because on the health reform, for example, the health task force report proposed a very good replacement plan for Obamacare. And this is now a unified, this is the House Republican majority is unified behind this plan. These plans were, led by the chairman of the relevant committee. So the tax reform plan, the chairman of the House Ways and Means Committee, Kevin Brady, was centrally involved in this. So now you have the Speaker of the House, you have the chairman of Ways and Means, and this is a very good starting point for any kind of tax reform plan. On the Obamacare plan, you have the chairman of the relevant committees in the House, and they've settled on a very specific, very good plan. This is not actually, I'm speaking on health reform, actually, on Saturday afternoon. And so if you want to hear about that plan, but that's a very promising plan. And I've been working with, I work at the Heartland Institute, and I've been working with the National Tax Limitation Foundation to promote these Ryan task force. We've been studying this closely, been working very closely with them. We worked hand in glove with them, providing input to them on how to produce what the results of these task force reports should be. If you want to be updated on our work on that, we have this ongoing project called the Roadmap to the 21st Century. We actually have 12 task forces. We're bringing together free market conservatives to develop these solutions in each of those 12 areas. The first 6 include Ryan's task force, but we're producing a report on any of these. On all 12 of these are going to go to the new president's transition team in the fall. And so if you're interested in what we're doing with that, give me your card, and we'll keep in touch with you as to what develops. All right, thank you very much.
Okay, well, thanks to all of you who've joined this panel. I want to extend a special thanks to the Tax Foundation for this invitation. I was really honored, because I think the Tax Foundation is one of the organizations in our movement that is consistently, punches above its weight in terms of the impact that it has in the tax landscape, and just generally among freedom-oriented organizations. Scott introduced me earlier. I'm Brad Lips. I'm the CEO of Atlas Network. And I was really happy when Scott gave me a little bit of latitude about what I was going to spend my time on here, because I don't know, I imagine it would be very difficult to talk about global trends in tax policy very difficult to do it, if not impossible, in 10 minutes. And even if it's possible, I'm not the guy to do it. But I thought I could achieve something in the time I have here, and that's pretty simple. I want to make you all aware that just like Tax Foundation is fighting this battle for lower, more simplified tax structures, here in the US, there is a global movement of free market organizations that are allies to all of you in this room who care about these issues, as well as other fundamental issues affecting the free society, standing up for property rights and civil liberties and rule of law. And that's what Atlas is all about. I've been connected with the organization for almost 20 years now, and it's inspiring to be part of this global movement, and Atlas is sort of a hub for it, a movement that now touches 97 different countries. We have 459 different partners, and it's an inspiring place to work because you're in touch with people that are often operating at great personal risk to stand up against sometimes truly tyrannical governments. And we've seen some of them make real impact in their societies. I'll touch on a few examples. Others, it requires a little bit more patience because they operate in difficult places where the best they can do, I think, in the short term is to lay the groundwork for future reforms, because reforms rarely, if ever, happen on a timetable that we dictate, but we know that we need to have these ideas understood broadly in the public and by decision makers well in advance of those opportunities when things can go one direction or another. And we've seen countries that have been coming from very difficult circumstances in former communist countries in Eastern Europe make real leaps forward. We've seen India make big leaps forward. So I do think it's important to keep this long-term perspective when you look internationally at the progress that can be made. And now, why should you care about these international groups and these international situations? I have sort of two responses to that. And one is that I just think on a fundamental level, it's the right thing to do. And I love sharing a quote by a Brazilian abolitionist from the 19th century named Joaquim Nabuco. And he wrote a book with a beautiful quote that goes like this. He wrote, "Educate your children, educate yourselves in the love of the freedom of others. For only in this way will your own freedom not be a gratuitous gift from fate. You'll be aware of its worth, and you'll have the courage to defend it." And if that quote resonates with you, this idea that in some manner we can earn the precious gift of freedom that so many of us were born with by demonstrating our love for the freedom of others, if that hits home with you, you're an Atlas Network type of person, and I hope you'll track me down after this to learn more about what we do. But I'd say that even for those of you who sort of shrug that off and say, well, what's in it for me? Notwithstanding some of the hopeful notes that Peter shared with us on the national level, I tend to think that there's a very self-interested reason to care about the work that these groups are doing around the world, and it's sort of a global diversification strategy, knowing that maybe things are not going totally well here at home, and it'd be nice to see some progress made in other countries. And that, I think, is the kind of thing that Tax Foundation has stood up for a long time, and Dan Mitchell talks here regularly about tax competition. The groups that are involved with Atlas are pressing that case, and then, of course, working in their own countries for lower rates, more simple tax structures, and some have been very creative in doing it. One I thought I'd mention at the top is Taxpayers Association in the UK, an organization that's been around for a little more than 10 years now. And one of its early wins stemmed from their involvement in an Atlas project. It is something we hold annually called the Think Tank Shark Tank. I think that Mark has here at Freedom Fest this year, I think a Shark Tank pitch competition or something along those lines. Similar concept. Taxpayers Foundation won one of the first years that we held this. And they're sort of pitching to free market philanthropists to get a new project underway. And what they wanted to do was draw attention to some of the less visible taxes that were costing British taxpayers. And their target in this instance was the beer tax. And what they did with the small prize money that came from our contest was print up 250,000 coasters. They call them beer mats on that side of the pond, and then distributed them to pubs throughout London and throughout the rest of the UK. And complemented this with a media campaign that would help to amplify some of the grassroots outrage that they were ginning up by pointing out that for every 2 pints that you were buying, you're essentially buying one. You should have a third were it not for the taxes. You're buying one for the government office down the road. And what happened, they were able to take what was a scheduled increase in the beer tax, get that scrapped, and actually turn it into a cut. They went on to bigger things a couple years later with a major project that brought about some reductions in the corporate tax rate, top income rate, some other simplifications about how businesses could be treated in a more level playing field in a way. And then its founder got involved in a side project. He wound up the executive director of something called the Leave side of the Brexit campaign. So he's had a real big impact. Can't say enough about Matthew Elliott and the Taxpayers Alliance team, as they've, again, punched above their weight in the UK. A couple other positive stories that I'd mention. The Canadian Taxpayers Federation has had some success recently, the municipal level and the provincial level. They most recently ran a campaign where they spent $40,000 combating a $7 million, so government-funded campaign about a referendum in Vancouver that would have implemented the first municipal sales tax in Canada's history. And they began their effort down 14% in the polls, wound up defeating the proposal by a whopping 24%, 62 to 38 was the final tally there. And more recently, they've been able to claim a little victory. I think they've become very adept at getting a lot of attention in earned media with not a lot of investment. And one of the victories they were discussing over email with me recently was the punishment that they delivered to Greg Selinger, who ultimately resigned from his post as the Premier of Manitoba. He had broken a campaign promise not to raise the provincial sales tax. And then he went ahead and did it, and the Taxpayers Federation in Canada held protests, but then decided that what was really catching on was that they had this guy dressed, I guess, up as a character they called Fibber, which had a big Pinocchio nose, and Fibber became a staple at Selinger's public appearances. And this was a low-cost strategy for keeping this betrayal on tax policy in the news until elections did indeed force a change in leadership. So those are some examples of grassroots efforts to make some political noise. A lot of the groups that are involved with Atlas are much more research-based and working towards educating the public about what sound tax policy looks like, the kind of work that the Foundation does that's really nonpartisan and above some of those political fights. And one of the things we like to encourage at Atlas, and I think it's sort of the power of the network, is stealing. That doesn't really sound right, but the replicating the ideas that are working in one country or one state, seeing them adopted in others where they can have similar success. And I'll say that one of the most frequently replicated projects has its home with Tax Foundation, and that is Tax Freedom Day, which is really a simple bit of math that looks at the date on the calendar when a country's citizens have earned enough of their own, earned enough pay to cover their full tax bill for the year. So that's something that different countries are able to adopt and create some outrage, and people realize how late it is in the calendar that they start to actually earn money for themselves, having relieved themselves of the government bill. And there's an organization called Civismo in Spain that was able to use this to great effect a few years ago, pushing for using this as an educational tool as they pushed for a tax reform that did take place in 2013. I understand they've now taken this to a new level where they're looking at the full lifetime tax contribution that a working person makes in Spain. And I have not studied the methodology here, but I know that they've made some noise over the fact that the average Spanish taxpayer needs to work 27 years just to pay their lifetime tax bill, which is really depressing. I don't know if that would be in the US, but we're getting towards the end here, so there's some interesting examples from Eastern Europe if we have time for questions. But I'll just leave you with that just as the Tax Foundation has had a real impact on policy here in the U.S., there are a lot of sort of Davids fighting Goliath on tax issues and on other issues of that are vital to the free society all around the world, and Atlas Network can connect you to them. So let me know if you'd like to learn more. Thanks again for this opportunity.
I couldn't be more embarrassed to have one of our speakers mention Tax Freedom Day, which the Tax Foundation has been calculating since 1971, and it is one of our premier products. And sadly, Tax Freedom Day came on April 26th this year. It's basically 105 days into the year. We essentially work almost a third of our year just to pay all of our taxes at the state, federal, and local level. It's the most comprehensive measure of our tax burden. And of course it goes up and down each year, but every year recently it seems to be going up and up and up. And we are gratified that I think more than 15 organizations across the globe celebrate or calculate Tax Freedom Day for their countries, and it's a great way to illustrate the tax burden. And we thank Atlas for helping to make that a global thing. And Peter mentioned some of our analysis of the Ryan plan. We've also analyzed all the presidential plans, and that's on our website at www.taxfoundation.org. I'd like to see if you have any questions. If you could step up to the mic, and we have time for one question.
One
we'll
question?
We'll be around, by the way, for a while if you'd like to ask more, and we have a booth over in the hall.
Well, I appreciate the efforts of the Tax Foundation to nullify the system that we have now, which is absolutely ridiculous. And but I have heard no mention of the fair tax. H.R. 25, the bill is in Congress, been in Congress for several years. Peter talked about corporation taxes being 35 to 20, and it's going to lower it to 20%. What good is that? You know, and I know, and most of these people in here know that corporations don't pay any taxes.
Right.
It's the individual that pays the tax right through the corporation. Another thing he talks about deductions. H.R. 25 does away with all those deductions. Fair tax will do away with those deductions, and it won't be penalizing anybody. The hours spent in preparation, another big thing for the fair tax is the fact that there's no preparation in the fair tax. You're going to pay your tax when you buy your product.
This is sounding like a free advertisement now. Okay.
I'm just
Actually,
debating. I'm
no,
just
I-
debating some of the points that Peter made there.
No, I appreciate it very much. And we've looked at all the major tax reform plans, and basically we support all of them because our tax system is so abysmal, we'll take anything over what we have today.
Absolutely.
And we've measured all of them. We use our macroeconomic model to do that. And it's really important that people understand the full ramifications of these plans. So, and actually, when you look at it, the fair tax is very similar in the way that it affects the economy as many of the other ones. So it's up to all of us to keep pushing for tax reform and not let that hope die. And I think, as Peter mentioned, we're on the precipice of this in Washington, and I think a lot of it becomes because we have so much pressure from below at the state level. The more we get states involved in fundamental tax reform at the local level, the more we're going to have tax reform at the federal level. Remember, it was Proposition 13 in California and Proposition 2.5 in Massachusetts that built the momentum for the Reagan tax cuts.
Yes.
And it's that kind of energy that is going to bring us tax reform here in the United States.
One other point I'd like to
Okay,
make
one
is...
last. This is my
point.
dime. This is my microphone.
10 years. Do we have time to wait 10 years for
No.
results?
No.
No, absolutely
Start
not.
next-
We need results now.
Absolutely. And on that note, thank you all very, very much.